5 ways to move your money out of your bank account to get something than zero interest. Well, you obviously know if you have some extra cash in a bank and the interest rate is zero, almost zero. Well, I'm going to show a couple of ways to think about it, or even like sometimes if you expecting some extra money coming into you, what to do with it, like prioritize what is important to you. Now, obviously, it depends on many factors, but I'll try to cover in the broad sense from low risk to high risk and what should be your priorities as a reference because you have to choose what is important to you. So, this is more like a reference. You have some extra cash that you're not putting to use, or it's there for emergency, but there's a little bit of more than it should be. But maybe not. Maybe you don't have anything, but at least you can think of in these terms. Um, So, and also the timing is important. If you're in 20s, 30s, you're probably more open to risk, versus in your 70s, you don't want to take much risk. Uh, so, it all depends on the timing and the other things. But I'm going to cover generally 5 ways to put money than just sitting in the bank and no interest. Um, the first thing is obviously you should have a couple of months of savings, at least 3 months, I would say. But sometimes maybe you can go up to 1 month cost of living too if you are really trying something else. But ideally, you should have at least cash saved up for 3 months, and that is something you up to you. How much is the tolerance? Because some people want to keep a lot more months of savings, and some people are fine with 2 months, 3 months of cost of living expenses in cash or almost like cash. So you can put to work if they need to for emergencies, or they can access it a lot quicker. And here, the first thing is always just to make sure you have that amount, even whether it's 2 months or 3 months or even 1 month of for your emergency, and the rest you can kind of make some plans based on your situation. And the first thing is there are some credit unions that do give high interest for your first $1,000 or $200. So they give you like 5% interest rate or even 6% interest rate, just to show that to you should save some emergency money like $1,000. So that's the first place to put $1,000 because you're gonna get almost 5 to 6% interest rate, which is a good choice. Now you may not have a local credit union in your area, or if you're not using, consider about it, think about it. There are some credit unions that are giving uh, the first $1,000 6% interest rate, which is a pretty good, not bad, and that's something immediate. You can access it anytime you want. So that's like no brainer. Okay, that's one. Uh, the other option is if you are having some debts and you can prioritize. Obviously, paying up debts is always better than just putting in a bank. But it's about you and prioritizing. Pay off your high interest rate debts if you have, if you don't have them. But you have to. There's up to you to make a choice. If you have any low interest debts, that's up to you because they're long term. So that can be something you have to choose. But always have this in mind. Like if you any debts are there, they are supposed to be paid off. You're always better off having zero debt than any sort of debt. That's one angle to think. When you have some extra cash, or you have some extra cash and you are keeping it for a rainy day, but maybe you don't want to keep that much for a rainy day, but maybe a little bit, like just a couple of months of savings. So that's something you have to decide based on your situation. But that's always an option to put to good to use. The other option is using treasury bills. So the U.S. treasury bills, you have um, a time maturity, and you can do completely online. So basically, treasury.gov, you can find them about it. You basically buy like $990 and you get $1,000 face value. So when the time matures, so basically you're giving less than the face value and you get the face value, and it's pretty safe, very safe, I would say. Um, that's another extra option if you want to consider that for some of it. And this is something you can do on your own completely. And the next parts are like bonds, which is something, they are little low return, low risk. That's another option you can consider, bonds, if you want, if you're open to that. uh, and the next one is investing in like semi-liquid. So this is more like not so liquid like high risk stocks, but semi liquid. So this may take some months to liquidate if you need cash, but it is like cash in a sense. It's not like buying a home, which you don't know how much time to get cash if you want. Like it take months and all the closing costs and all that stuff. So it's almost like cash, but not cash. So now we are going into a little bit higher risk. So here, what I'm saying is, you can consider like semi-liquid things are like REITs, crowdfunding, all these crowdfunding websites, investor peer-to-peer lending. There are so many of them now. So where it's crowdfunding, like a Realty Mogul or Fundrise, or there's so many others now. So all those things can be like semi-liquid but not liquid. So you have to consider that. But you get a good return depending on which one you're choosing. So if you're okay to not need the money for 6 months, 3 months, sometimes I think you have to go by their plan. They'll tell you if you need to liquidate how fast you can get, and it depends. So that's why I'm saying it's not liquid, but it is better to put there than putting in the bank, because it is backed by real estate. So it's not just like you're putting in some stock where it's high risk. So that's another thing to consider. So this is all like risk level and time also. So there's a risk and time, the two things. So that's the fourth, and the fifth is investing in stocks and other things which are a little higher risk, and you can liquidate them in a couple of days. So now, obviously, every stock is different. It's a subject on itself, but that's an option always to put money in, where you may get dividends, or you may have growth stock, you may have value stock, which is not much going, but it's good value. It's not going to go down because it's good value. But this is like a last end of the spectrum. So depending on the spectrum of these five options, you can move your money than just putting in your bank with zero interest. And you need some planning, and you can get some help or get advice, obviously, because it's always better to get a second opinion. And usually financial matters, you have to take responsibility because that's your own, somebody else, instead of just depending on other people around. So anyway, hopefully this gave you some different perspective. So there are like five options to move your money around. Whether you have some lot of money saved up and you're just thinking about it, or you're in your 20s and you're working on some projects or some deals and you get some extra cash, what to do? Well, there you go. Those are priorities to think about. Now it can be overwhelming, but the first few options, which are like almost like bank, but they can give some good return, like Treasury Bills or putting in a credit union bank with some interest rate for the first $1,000. Those are always a good way to start if you haven't done it all. So those are the things that can be useful to you. So hope you apply. Thank you for watching.